So the subject of this week's video is what to do with your hard-won savings. The most popular option typically in the UK has been property. Bear in mind that £3.6 trillion of our household wealth is today tied up in property. It's the largest part of our overall wealth, which amounts in the UK to apparently £83,000 per person, according to Credit Suisse. So we are the fourth richest country in the world on this measure, only after countries such as Australia and New Zealand, coming fourth. So we're pretty good at £83,000. Biggest chunk of that's in property. As I said last week, however, buy-to-let is becoming a more expensive form of investment. You should look elsewhere. The second option clearly would be cash. The ISA season is just finishing now. A lot of people would have put money into a cash ISA. The problem there is today the average interest rate in a cash ISA account is only 1.2%, so it's pretty pathetic. People haven't put money into ISAs as much as in previous years because the interest rates are so low today. It's not really worth it. So what do you do with your money if you're not going to buy property and you don't want to stay in cash? Well, my option is always to look at safer, higher dividend yielding shares because they will offer you a much better long-term income than you can get from, let's say, a cash ISA. Companies such as Astrazenica in healthcare, such as Britvic in drinks, such as Pennon Group in water, and such as Vodafone in telecoms. Now, when you take these 10 companies in the article all together, they will deliver you an average income yield going forward of nearly 5%. So to give you an example, that will give you 4 times more than you can get in an interest rate from a cash ISA. And over the last 1 year, this group of companies went up 7% at a time when the FTSE 100 index went down 12%. So their relative safeness has led them to outperform the wider stock market. So there you have it, 10 stocks to deliver a better income for your ISA going forwards.